Now it's time to catch up with the latest business news, and Susanna Streeter is with us. Hello.
Hi there, thanks very much, Jane. Yes, we're focusing on the G20 summit because the meeting of the world's 20 leading global powers is underway in Seoul, with the debate dominated by allegations of manipulation and protectionism by member nations, not least over the value of currencies. The global gold price, a good barometer of investor sentiment, has jumped to its highest point in 5 months. Meanwhile, here in Europe, there's more trouble on the debt markets, with yields on Irish government bonds soaring to record levels for a second day. Well, for more on this, let's speak to David Jones, who's at IG Index. Hi there, David.
Hello.
Now, gold has risen again. To what extent is uncertainty about the outcome of the G20 summit partly to blame?
I think that there's definitely three things playing the part here. Uncertainty is one of them. It's difficult to see how there is going to be any meaningful resolution, I think, out of the G20 summit because, of course, the US has come in for heavy criticism for its latest round of pumping money into the economy. It's trying to do its bit to make sure its economic recovery is fine. So that's one concern. We won't see a resolution. Chinese inflation was at 2-year highs today. Again, gold classically used as a hedge against inflation. And because of what the US has been doing, the dollar's very weak. So traditionally, when the dollar goes down, gold goes up. So all of these things have just helped lift gold out to all-time highs this week.
And also there's been an impact on the debt markets as well, hasn't there?
Yeah, that really hasn't helped global confidence. Of course, again, it's helped the gold price, but we have seen, I think, for the last 13 days, Irish bonds, the yield on Irish bonds continue to get sort of racked up, and it's really because of uncertainty and maybe a little bit of a rumour that had been going around that the Irish government would need to go to the IMF, the International Monetary Fund, for a bailout to help its economy. This has been denied by the IMF, but investors and traders, once again, incredibly nervous about the state of European economies, the Irish economy in particular at the moment.
What was hoped, particularly by the US, is that there would perhaps be limits set on how much surplus and deficit that member countries in the G20 could have in terms of their trade balances. Do you think that's going to happen?
I really can't see it happening, I think, at the moment. If you look at the Irish problem for now, I think that the amount they've had to pump in to try and help the banking system there is expected to get as high as 50 billion euros. So again, that's a massive impact on their economy overall. And I think at the moment, countries are just too concerned about their own particular economies to worry about coming to any sort of agreement where we all try and play fair together. So I think this selfish attitude is going to dominate economies for probably the medium term at least. OK, David Jones from IG Index, thanks very much for joining us. In some related news, shares in the part nationalised Royal Bank of Scotland have fallen 4% on fears over its exposure to the debt crisis in Ireland. RBS, which owns Ulster Bank, saw shares drop by just 40p in early trading in what's been a bad morning for bank stocks overall. Sales at the upmarket food retailer Waitrose continued to boom in the third quarter. The store, which is part of the John Lewis partnership, saw sales rise 9% in the 3 months to the end of September. They were up almost 10% overall to the end of the last week, buoyed by demand over Bonfire Night and Halloween. One shopper went into the Waitrose branch at Canary Wharf and spent £8,000 on wine in a single purchase. Perhaps he had a nice big bonus.
You see, bonuses, they're still alive and kicking. Exactly. My goodness.
Susanna, thanks
Sobering.
very much.
Or not. Or not. Thank you.